Hi, hello Dr.Stock viewers, welcoming you all to my new video. In this video, we're going to detaily see about an investing idea which is being approved by SEBI in the year 2007. So before I want to start this video, I want to thank all my subscribers who are part of my YouTube channel. So I want to take this time to give an thumbs up to all you people who have subscribed to me. Reason being, day by day the subscriber count is getting increased, and this makes me more like giving more importance to the contents that would help all the financial investors over here. So that is my part of aim. So it's like I'm concentrating more on the investment ideas rather than the trading things. Reason being, investment is something like a long-term horizon, so that will surely generate a wealth for all of us. So that's the reason I'm concentrating majorly on the investment front. So that is the part I am doing right now at the moment. Let me slowly switch on to other types accordingly as per the wish of the subscribers accordingly. So I want to thank each one of you. So if you like all the contents of my videos and you feel that this need to be transformed to someone else and you want me to grow in a good way, then try to help me in sharing these videos to your friends as well as in relatives who are interested to make some investment with some capital safety and all other safety investments. So that is the point where I'll be touching majority. So I'm more concerned on the capital front to be saved. So now let me move on to the important topic which I'm going to speak about today. As you guys would have seen the thumbnail, yes, it's going to be a new investment idea that is called as REITs, and this has been introduced by SEBI in the year 2007. And recently we have two players who are in the market right now with REITs. So one is came into the market in 2019, the other one came to the market 2020. This details we'll be seeing in the next part. On part one, today's video, what we are going to see is what is REITs and what are the advantages and what are the way in which the funds is getting distributed. How come this investment is getting differed in other form of investments which we are doing as a part of shares. Now let's straightly jump to the important point of what is REITs in a form of a presentation. So that would be the easy understanding for all of us guys. Moving on with the REITs part. So what is REITs actually? It is nothing but the real estate investment trust. So it's like there will be a trust and that trust will be maintaining our particular amount which we are putting as the investment. So what is the main advantage here is the income is, we are going to get the income based on the commercial properties which a real estate promoter will be holding. Okay, so they will be getting the lease amount from that particular customers. So in that amount, okay, we are going to own something like a mutual fund investments over here, and they will be giving us in the form of dividends. Every 3 months once they are planning to give the dividend to us. So that is how this investments is getting deferred. So we will be owning some quantity in the form of mutual funds. So it would not be a stocks or shares directly related with the kind of investment. It would be like a mutual fund units we will be owning. So that is the key term we need to keep in mind here. It is not like shares. We will be getting some dividends in terms of mutual fund holdings. Like that, the procedure here comes. Now let's go on to this one by one and let's understand what is these things accordingly. So it is like a investment trust which is being built by that particular investment firm. Okay, they will be having some kind of assets very close to 500 crore value, and this would be in different parts like commercial. It would be in the household properties as well and other different types of properties. Right now in the market we have only commercial type of things has been listed. So let's check what are the possible things which can be added in REITs, all other things. Let's go to the understanding of REITs. Coming to the point, what is the understanding on REITs is, it is like we will be owning some real estate properties in the form of the investment which we are putting. Okay. In turn, the real estate proprietors will be handling this trust, and how they are going to handle is they will be having some lease agreement with these companies. So all the things, like it would be like a 3 years, 6 years, like that, it will be on different terms, and whatever the amount they are going to gain, right? So we are going to get 90% of the amount in the form of rent. They're going to distribute to us in the form of rent. So that will be happening every quarterly once like that. So that is how this REITs is having the thing. And main important thing why an investor should need to concentrate on this REITs is it is like diversifying our portfolio, and also we will be having a long-term capital appreciation in this case. Reason being here is uh, the players are not using this money directly to make some different things. It's like 80% they will be using this on a property which is rented out, and they'll be using the 20% additional 10% for the funds, I mean for the projects which they are developing, and 10% additionally in any other format, or they'll be holding in the cash. So that is one of the thing, least, I mean that is the value where this REITs funds will be going. Let's move on to the history of REITs. So this history of REITs will be coming later. Okay, so how come history it has been developed in India and US, all the things let's look on later. Now, eligibility of REITs. So there are some guideline principles which SEBI has put for this REITs. Okay, what are the guidelines is any player who are applying for REITs will need to have an asset base of minimum 500 crores. That is the one key important point from the player who is going to apply for REITs. Then what the player will be doing out of this money which we are paying out of 100 rupees, out of 100 rupees which we are going to pay, they're going to invest 80% of our money on the properties which is capable of generating revenues. That means it is a completed properties. So there they will put our money, okay? And 10% out of which 10% they can utilize in the properties which are under construction. That means majorly 80% of our money is going to the property which is already yielding. So that is one of the important point we have to keep in mind out of this 500 crores investment I'm saying. And 10% they will be having in ready cash, or they might invest in somewhere else, like they can invest in gold bonds, or they can invest in anything which is secure. So that is up to them. And what is the other thing? They need to update the NAV value. It is something like a mutual fund unit, right? They need to update the NAV value twice in each financial year. That means every 6 months once they have to update. So that is one key important thing. And 90% of the income, okay, that they're receiving, right, that need to be distributed to the people who are holding these units, right? So they have to distribute 90% of this income, that is the rental income, to them as dividends. So this is being done on every 3 months once. So when we go for part 2 of the video, right, so we have totally 2 players right now in REITs. We're going to see about what is there happened. One player is listed before 1 year and one player is listed before close to 1 month only. So we're going to see about them detailly in the next part. Now, how do REITs work? So this is our next point. So coming basically into how REITs works is, REITs can be used for the real estate related funds. For example, a builder would have got some money from the bank and he would have built this properties and he would have made this assets, right? So when he is raising his fund, what will be happening is, so he will be settling some amount to the banks so that he will be avoiding the interest part as well. So that is also one of the options. And again, REITs hold their properties, right? So REIT can hold this properties in any form, right? It would be an office or hotel or shopping centers, any form which is going to be a commercial building. That's it. And MREITs, that is moratorium REITs, right? It is like financing of properties that may be a residential or commercial part. So that is the other part of REIT. Right now, we don't have any MREITs in India. Right now, we have only REITs in India. So we'll be discussing this in different types of REITs as well as. So REITs provides a quick liquidation to the investors, that is the real estate market. So that the people can use it for different things. The real estate owner who is coming to REITs issue, right? So he can use it in different things. So REIT structure formation and implementation. So why this REITs is formed, and the reason being all these things is, so it is like giving liquidity to the real estate builders so that they will get some extra investments. Okay, so it's like the mutual funds and in the stock market basis, right? So people are getting extra investment to build their business, right? Like the same way, government has initiated these steps, and as a result of this, even it would be a dual thing. So we'll be sending money to the investor in the form of buying this, and that investor, right, the person who is investing on the building, right, he will be sending us back the money in the form of the dividends. So it is like a two-way way. That is like even the citizens who are building some money on this particular funds will get benefited. It's like a mutual benefit for each other. So that the cap on this real estate space where we are going to spend money, right? So it is like getting additional fund for this investor so that he will be safe in his terms of fundings as well. So government also ensured that there will be a regular dividend happening to this. That is the one key important factor in this system of funding. And one more major important thing here is the amount which we are earning as a dividend in the REITs, right? So that is completely tax free. So it's like there is a rule that when your dividend is going above 2 lakh, you have to pay tax on it, right? So for REITs, when you are getting the dividend above 2 lakh rupees dividend, you won't be paying any tax. So that is the special thing which we have in REITs. So now let's check the important thing, that is the advantages of investing in REITs. So we are not going to invest directly in any property. We are going to invest only in the form of units. So that also the constructed one. So that is one of the important thing. And main important thing is, so if I want to invest in any commercial property, for example, I gonna invest something in Eco Space in Bangalore or in the Embassy Space in Bangalore or something in Pune or something in Hyderabad, right? So I cannot able to do it directly. So whereas in the form of REITs, I can do it directly, and I'm going to own in all the place where that particular specific IT park is running. So that is something like a growing one. Right now, the pandemic is something creating different, but still on a longer vision, short, this kind of investments are going to rock for sure. There is an article in the paper also recently. There are some mutual fund players who have increased so much allotment for this REITs recently. So compared to other investment, this part of the liquidity risk will be very less when compared to any other real estate. For example, you purchase any stocks which is related with real estate, so there will be some drawback or something related to that, but still REITs will be having a stable value. Reason being, it is like a mutual fund unit, so the drawback or drasticity will be not that much low immediately. These are something very transparent and this been regulated by SEBI. That is one of the most important thing. And majoritarily you will be getting a standard dividend. So that is the key point you have to own. For example, you are making an investment of 300 rupees, and this 300 rupees investment you are going to hold for a period of 5 years. Let's take it as 5 years. If you get 10% dividend, fine, it would be like 30 rupees for a year. At the end of 5 years, your invested amount is 300, and the capital, you will be getting a dividend amount, right? It would be like 30 into 5, it would be close to 150 rupees. And your 300 investment will be something like 330 or something like 350 will also be a beneficial, plus your 150. You will be getting very close to 350 plus 150. It would be very close to 500 rupees. That is how this comes, because you will be getting a good dividend amount. So this guys will be having a long-term lease with the particular players, and they will be having different things that we'll be seeing in the part 2 of the video. Let's go on to the objectives of. So majoritarily, what is the important objectives here is, so REITs are very much transparent and they have to submit their clear report on every 6 months once. So that is one of the key important thing. And as per the diversification portfolio, they have to minimum invest in 2 projects which is yielding minimum 60% investment. Fine, that is one of the thing. And the other thing is, whatever money we are going to spend for 100 rupees, 80% will be completely spent only on the properties which is earning. We have to keep this thing very clear that they are spending 80% of things in the limited, which is completed and earning good. And 20% is allocated to different things, like they can utilize it for any other thing, like for constructions or in stocks and any other thing they can put. So that is according to the trust which they are planning to invest. So now coming to the point, types of REITs. So there are different types of REITs at the moment which is available in the market. So there are 3 types of REITs. So equity REITs, mortgage REITs, and hybrid REITs. Equity REITs is nothing but they are the owners. Some real estate people will be owning this property and they will be getting the rental income. They will be giving it to leasing to some other big players. Next point, that is mortgage REITs. What is mortgage REIT is? Actually, that particular player would not be the owner. Rather, they would have leased out from the owners and they will be paying some EMI amount. So that is the second part. So they will be having some distributed form of things. Third thing is hybrid REITs. That is the combination of both equity REITs and the mortgage REITs. So let's see what is the difference between REITs and real estate mutual funds. REITs and real estate mutual funds are slightly different. Only common thing is this can be diluted and can be make money anytime. The liquidity is very quick in both the ways. And as a part of the investor point, we will be having a diversification portfolio. So it's like we will be having a low risk in REITs and that will be continuing as a good capital appreciation in a long term. So that is where the REITs is playing an important role. And when we go for real estate mutual funds, what will be happening is you will be having some high risk and the people will be there for managing your funds. So where need to be your real estate mutual fund where need to be applied like the mutual fund people, right? Fund managers, they will be there for real estate mutual funds. And main important thing is in REITs, the advantages you will be earning a constant dividend. That is something very good at the moment. So the value of the real estate mutual funds will get decreased according to the inflation on the property prices. But the rent way, you will be getting a minimum rent guaranteed and each year the rent will be increasing. That is the main advantage on REITs and comparatively with the mutual funds. More importantly, both are spread in several categories and it is like, and main important thing for all the investors, right, who are planning to invest in REITs or in mutual funds, the main important thing is you should not allocate more than 10% of your investment in this type of category. Reason being, you have to have a diversification portfolio. For example, you plan to invest 1 lakh rupees. So your investment value on this kind of thing should be not more than 10,000. So that is how these proposals are coming as an investor point. And RBI is allowing banks to invest in REITs also. So that is something like good news. So something like when we get steady REITs getting listed, right, we will be having a good diversification portfolio coming into picture. So it is like you will be having more REITs and you can apply for many REITs and you can have it safely. So actually REITs are something which is there in international market for a very long time, almost very close to 60 years in US. So REITs are applied in US in the year 1960. We have around very close to 200 plus REITs at the moment in US stock market. Whereas REITs were first introduced in India in the year 2007. Okay. So it's like after 2007, it is almost very close to 13 years. Right now, we have two players in REITs at the moment in India. So it is how we are developing in this way. So we'll slowly develop in this space as well as many investors are looking for a diversification profile. Thanks friends. Thanks for watching this video. If you really like the content which I have given to you guys, please give me a like and try to forward or share this post to your friends who are interested in earning in the financial market. Thanks friends. Thanks for watching this video.